Hi everyone, welcome back to Risk Biscuits. Thanks for watching. Today the show's taking a turn to the right like that on the freeway. As I announced last week, I realised that it's probably more interesting to talk to some other people rather than just listen to me ramble on every week. So we've got our first guest today, Buyback Capital, that you would know him by on Twitter. Larry Jamieson, at Larry Jamieson on Twitter. Who's agreed to be my guinea pig, my first guest, come on, tread softly and guide me through the process as we sort of fumble along. If you remember, if you enjoy the show and the content that we're writing, please like and subscribe on the YouTuber now. So I've got to get the subscribers up. And look, probably without further ado, I'll just sort of intro my guest. So, what do you want me to call you, Buyback or Larry or?
You can call me Larry. A lot of people I meet from Twitter like insist on calling me Buyback. So
Yeah, okay.
whichever one's more comfortable.
I'll go with Larry. That sounds better. So Larry is obviously um, big on Twitter, famous for his Arista memes, private investor based in Queensland, Australia. I think I'm correct in saying that he's a fundamental long only type investor. Um,
Yeah.
and digging through the trenches, all the stuff that I try and avoid, which is good. So look, I thought I'd get him on today. We just have a sort of a general chat about investing and investments, see where the conversation goes. Hopefully people can learn some things from it and we'll kind of take it from there. So thank you very much for agreeing to come on.
Thanks for having me. I feel very honored to be the guinea pig.
Yeah, well, you say that now, we'll see how again. So like maybe for people that are less familiar with you and your background and that sort of thing, if you want to kind of I guess sort of start at the beginning, like how did you get into investing? What sort of attracted you to it? Just sort of I guess your journey story, origin story, and we'll kind of go from there.
Yeah, no problems. So I'm originally from the Sunshine Coast. My dad was a property developer there, and he owned, pubs and hotels and that kind of thing in Queensland. So yeah, he was always talking about money, ways to make money, different real estate deals, different things he wanted to do. And, he also, bought and sold shares. He had lots of friends who were, brokers on the sell side back in the day. And, he knew about Buffett a long time ago. And so, the interest in managing shares and markets and all that kind of thing was just really something that I picked up by osmosis, which I think is maybe a way quite a few people get interested into it. They see their dad, or maybe less common, their mother's interested in it. And yeah, you sort of pick it up from there. Obviously, when you get a little bit older and you become a young adult and you have a few bucks in your pocket for the first time, you also wonder what you're going to do with it. Like, if you're not actually spending it all the time and, you save a bit of money, you're confronted with a pretty good problem, which is what to do with it. And so, it was kind of the combination of those two things. And yeah, so I think another thing which is cool about my particular approach is it's as close to a liberal art as you want to. So it's not overly quantitative. Kind of matches a whole bunch of things together. And I was a humanities law student, that kind of thing. So
Yeah,
kind of built into the approach.
yeah, cool. So given your dad's background in property and pubs and that sort of thing, what attracted you, I guess, the share market versus, property and those sorts of things?
Yeah, so my family did go through a bankruptcy during 2008, 2009, which was, I was small at the time, but, from piecing it together, probably too much leverage. And anyone who's involved in property development will know you kind of fund the initial parts of it by getting
Yep.
deposits on units, and then you you have to wait on people to settle. And so if there's a mismatch in the time where people can make deposits and when they can settle, that's a recipe for disaster. So that kind of like was a very early experience in my mind, which kind of seared in, the conservative approach.
Yeah,
My
okay.
dad was a lot more of an aggressive, entrepreneur, businessman type. And even now that he's going into his 70s, he'll ask me if he should borrow money to buy more stuff. Like he just can't help himself. So, but
Yeah, okay.
it did perfectly fine, bounce back from it, all that kind of thing. But his approach to business and life was informative to mine. And I think many kids, they adopt the opposite approach of some of the things their parents did. A very
Yeah, that's
aggressive parent, very, more passive kid.
yeah,
So
fair enough.
that's one reason. Why shares versus, any other markets like Forex or crypto or property? Anyone who follows me on Twitter will know that like half my posts are just like speculating on the absurdity of the Australian residential property market. And I think it's hard to underwrite like very, mouth-watering IRRs in residential property. You can borrow against it, and all that kind of thing. The cap rates are low, the debt in the country's high. I don't want to have to rely on the government to prop up my bags. So, that would be one reason why I'm not that keen on property. But like all financial markets are, to some extent a derivative of the debt markets. Like the beginning of a transaction is borrowing money, and that's kind of the beginning of a lot of businesses as well. And so the way that you can repay people repay their debts is through business or by attaining skills. So really the economic engine in this life are businesses, and shares are just ownership stakes in businesses. And so the most common way that people get wealthy and they grow their wealth over time is through business ownership. And you can look back at all the studies, and the greatest economic returns over very long periods of time are ownership stakes in businesses. So I'm kind of get all those wins at my back.
Yeah, fair. And then so I sort of made a few comments early on and took the liberty of sort of pigeonholing you as an investor, but I guess now that you've sort of found yourself in shares and away from other markets, how would you kind of describe the way you approach the market and invest?
Yeah, cool. I would probably call myself something of a quality purist. I guess that's a description. A fundamental investor would be perfectly reasonable way to describe what I'm doing as well. But like if you really boil it down, I'm trying to own the best businesses that I can understand. And so the way my approach would like differ from maybe a lot of other people who are fundamental or value orientated, is that I look at the business first. So I want the valuation is an important part of that, but it's not the most important thing to me. I want to be in really good, really good businesses, and then I want to find a price at which that it can make sense to own that asset, because you can't pay an infinite price for an asset and do well. And so the things that I'm usually looking for, I post a lot about this on Twitter, but things like pricing power, strong organic volume growth, durability, and some kind of high likelihood that the returns of the business aren't going to be wasted by management or have heavy capital needs or heavy expenses. Or unusual amounts of leverage or like ongoing legal issues. So like just the ownership is a reflection of the economics of the business.
Yeah, okay. And then so that's kind of like a well kind of thought out sort of approach to the market, sort of how you've always approached the market. Like has your style changed at all over time, or have you always been this hardcore fundamental guy?
Not at all. So I think like probably a lot of young guys who are interested in the markets. And when I mean young, I don't mean what I am now. I mean like when I was in university, 5-10 years ago. I like many of my friends, opened a CFD account. You can get an E-Trade account through, my bank. Lots of people have like a CommBank account, that kind of thing. I was always aware of Buffett and, what business ownership and all that kind of things. But, I think like, you always want to try different things and see what resonates with you. As I'm sure you're probably familiar with as well. So I tried all kinds of things, option spread trading, macro, long short portfolios, deep value, all that kind of stuff. Like I enjoy getting risk on, but I want to, feel like I have an edge when I do it. My journey, as far as it is now, it's been trying to find a place where I think I can have an edge in the market and, invest in a way that's like very congruent with my personality, because I'm not someone who likes to make like a lot of decisions all the time. I'm more one of those people who like be great to just make like one good decision a year. And, that would be perfectly fine with me.
Yeah, it's sort of for me, like my journey, what I'm doing today is very different from sort of where I first started. And I feel like over the last sort of 4 or 5 years, I've got closer and closer to sort of who I am and what my style is as an investor. And I mean, that might continue to change. It feels like an iterative process that everyone has to go through in one form or another to kind of figure out who you are and where you are in the market.
Couldn't agree more.
Yeah, cool. So, all right. So that's kind of around we've sort of come to sort of who and where you are in the market today. I guess one good thing just to sort of get inside someone's head and sort of understand how they think about the market and think about things is kind of have a thought around, let's say whether it's an inheritance or one of your investments realized or whatever it might be, but you come into a large amount of capital that you're going to use for investing purposes. So just kind of like, I guess at a high level, take me through, this bucket of money comes in, how would you sort of think and go about putting that money to work in the market?
Yeah, cool. So, if I'm being honest, like the risk-free rate looks pretty good right now, so, that's and would always be the initial hurdle for me is like, what can we get risk-free at the moment? And so, you can save in the reserve currency in essentially in a, a high savings interest account, or, even in your, I use interactive brokers, other people use other things, but like they will pay you, almost 5% on your US dollar cash deposits. So that's a lot better than we had in many, many years. But the way that I invest, and I alluded to that just a little bit before, but it would be looking for, just a very few ideas every year, maybe every couple of years. Buffett said, during the last Berkshire Hathaway letter that, at his time at the helm at Berkshire, which is, over 50 years now, he's probably made, a really like significant, made an investment that had significant returns once every 5 years. And like, that's like the greatest of all time. So, and obviously, he's swung a lot, like to get to the really good ones, you've got to, you're going to have some shit ones. I think that's no one bats 1,000. So, I'm looking for spots where, I can really think that I have an edge, and these pop up at like really unusual times, like it might be a sudden sell-off in the market. There might be idiosyncratic risk with a particular company that I follow. And so, like if you put a gun to my head and you said like, here's $1 million, what are you going to do with it tomorrow? Probably short-term US paper. If you gave me a little bit more time, than that, maybe, a couple of years, there would be things pop up. And I even think with $1 million and the things that, I like to look at, there'll be opportunities from time to time, but like I don't have a systematic approach. Like there's a bunch of stuff that I look for, and there's opportunities that make sense to me, but like I'm a private investor, I don't have a mandate, or I don't have to answer to anyone except myself. So I like to swing when there's a lot of conviction. So yeah, it's a bit how long's a piece of string.
Yeah, and look, like, it would be silly to say here's $1 million, go and issue a bunch of buy orders tomorrow when it's fully invested. So, starting with the risk-free rate and park the money until a good idea comes makes sense. So then I guess if you're looking at a new investment, what are you looking for? Like if you've got your money parked in short-term paper or in your Interactive Brokers account and you're getting 4.83 or whatever it is at the moment, what are you really looking for that's going to get your mind to jump in and get involved?
Yeah, cool. So like primarily I am looking for two types of characteristics in an investment. And an investment would be, primarily a business. I'm not a special situations investor or anything like that. I'm a business investor. And this will sound super trite, but unusually good economics, which would either mean a company with that can reinvest at internally at unusually high rates of return. Or secondly, it would be a business that can grow its intrinsic in value without needing to invest any money. And like in that latter example, that it's probably a pricing power, operating leverage type deal. Secondly, in the former model, so in the model where you need to invest a lot of capital to earn greater returns, you're looking for some kind of very an unusually talented manager or management team, because you need a very good reason as to why a certain management team is going to earn really high returns. Like that's a very that's a bizarre thing. That's a strange thing. It defies economic reality. So you need a really good reason for owning those type of businesses. And in the latter example, I'm looking for a good management team that can allocate all the excess cash that's going to be generated. So you're kind of looking to get the cash back most of the time. But like the catalyzing event for an investment is like you really need to see something that either the market is like systematically undervaluing, or the market hasn't realized that this is an opportunity before. And so like the classic example, Buffett's done a bunch of these, but when he bought Coca-Cola in 1989, sorry, I think it was 87 and 89, they had just finished a series of deals with their bottlers of renegotiating the contracts, which allowed them to raise prices. So they hadn't raised prices on a syrup in like many years, or for use of the Coca-Cola trademark. And so they'd been doing a process of purchasing the bottlers and then respinning them out with these very advantageous agreements for the Coca-Cola, the IP and syrup producing part of the company. And so, pricing power came online. They started repurchasing a bunch of stock. The business just got a lot better. And that was, it's like 13 times forward earnings or something like that. So that's like a classic example of something changed in the business, which catalyzed a lot of value for the shareholders. And for a while, it was, very underappreciated. And so like something like that, has to occur, or you get a really good price because like there's a market risk or idiosyncratic business risk. So something like that, like you need a variant perception, basically.
Yeah. Okay. Yeah. Cool. And then, so if you're sort of looking at different investments and filtering through them through your process and that sort of thing, is there? Obviously, you're kind of evaluating on a range of different factors, but if you could kind of simplify it and just kind of drill it down to one idea, is there one of most important or key factor that you're looking for that kind of is moving the needle in your investments?
Sure. So like over the very long term, so that would just be a little abstract here, but
Yeah,
like
sure.
over the very long term, the most successful thing in owning part of a business has to be the returns generated internally by that business. So if you pay 100 times earnings for a business, but it can compound its earnings or its earnings power at 30% a year for 30 years, like you're going to have one hell of a result. Like there's
Yeah.
almost, like that, and that doesn't happen often at all or ever maybe. But the bottom line is like, for a business that is really gunning it, yeah, almost no price can, be too high. And so, over that very long period, you do need, for me, you do need to own something where the economic engine is really going to compound at a great rate for you. If you're going to hold on to these assets for a long time, like your return eventually has to kind of equal out the return that the business creates itself. And if I were to say a second thing, it would
Yeah,
be
sure.
that in the shorter or the medium term, things like valuation and factors and flow, people are obsessed with flows. And those can have a large impact like over even a couple of years, right? Like you can have huge multiple expansion in some of the things you own over a 3 or 4 year time period, and the business might not really have changed a tremendous amount in that time. And so if you can like marry them up, like you can get a really great economic engine and you can get it at a price which makes a lot of sense. That's like the sweet spot.
Yeah, okay. Yeah, that makes sense. Yeah, I don't think they come up that often, but I can get the idea that you get excited when they do. So let's say been through your process, you find you find a company that kind of ticks all the boxes and it's in the sort of sweets, just kind of know in your soul that it's the one or one of the ones. How would you, or what's a kind of a typical capital allocation for you? I guess how concentrated would your portfolio be, or how comfortable are you with concentration if you find the right ideas?
Yeah, so I'm very fond of Joel Greenblatt's approach, which is when you're sizing a position, you're looking down, not up. So like the less risky, and that's a bit that can be quite subjective, but the less risky that you can analyze a business is, given that it still kind of matches your return expectations, the more capital you should be able to allocate to a position
Yeah,
like that. So, like obviously these don't pop up very often, but sometimes, you could have, assets on a balance sheet. You could have a lot of cash. There could be, like a situation where a lot of cash is going to get returned to shareholders over a very, short period of time. Sometimes risk might be purely analytical. You think that the compounded rate in the earnings power is, you've got a huge edge at a particular moment in time.
yeah,
So that's kind of like how I think about it top up. I rarely have like own more than 7 companies. A starter
yeah, okay.
position might be like 7-10%. Like if I'm taking a big swing, I wouldn't blink really at like a 30% allocation. That's very atypical. That's not a usual thing that I'm doing, but
Yeah,
I mean
sure.
like
Pretty
like I
pretty concentrated though. Like when you,
oh absolutely yeah I like just personally, I don't know about you, but I find it like incredibly hard to keep up with like a lot of names. So if you're really going to do like a lot of work on a name, that means, so you've read like all the historical Qs and 10Ks, or if it's here, you get the annual and the quarterly reports, and then there are business updates. So you're talking about like a bunch of and maybe some of these companies have been around for like 100 years. So you're
yeah,
trying to get your hands on absolutely everything that you can, and then you're going to go through everything that the competitors have. And then you're going to read court filings, and then you're going to talk to a bunch of people, and you're going to go on to like I forget the Glassdoor. You're going to read all the Glassdoor reviews,
Yeah.
and you're going to like if it's a consumer product, you're going to try the consumer products. Like I got some
Brands.
of the vapes, whatever, cigarette. I won't smoke cigarettes, but I've had a vape before to try them out. And so like that's a lot of, and like I'm not I don't do this full time, so I do this
Yeah. Yeah.
in my in my spare time. And so yeah, look, just from a pure way I want to live my life and what feels comfortable to me. Like if you go ahead and you do all that work, and you build, I don't want to say conviction because conviction is a bit of like a butchered term, but if you really do feel like you've got an edge and there's a large margin of safety to what you're doing, I don't think a 10% position is particularly aggressive at all.
Yeah, I think I'm in the same boat. Like, although we kind of, well, at this stage, sort of investing, we trade sort of different things. Like I'm trading futures and that sort of stuff at the moment. But I find sometimes I'll kind of look at my portfolio and there's just like this, you know, a list of various things that I own, and I just kind of need to go through it and just like, and I'll just get rid of like 80% of it, and I'll end up with sort of two or three or four positions, and I think, yeah, that's probably enough for now. Like that's really the core. Everything else is just, I don't know, it's just sort of made its way there because of, I guess I'm bored or I've got an itchy finger or something. Um,
Yeah,
and really that kind of core is driving the returns, and
yeah,
you know,
yeah,
is what I've got conviction in.
yeah.
And you
Druck's
know that,
got that. Sorry, go.
no, you go.
I was only going to say Druckenmiller has that great quote where he's like, um, put all your eggs in one basket or, a couple of baskets and then watch the basket very closely.
Yeah,
I think
yeah.
that applies to many, many investing approaches.
I think so. It's just too hard. Like I feel like there's too much information, particularly if you're not doing it for a living. Like if it's, you know, you've got other work and that sort of thing. It's just too much to cover, and I think you probably end up missing things. So maybe, you know, maybe there's less risk in having some conviction because you at least understand what you own better. At least that's the way I think about it.
Yeah, and it's a discipline subject to the power law. So like you go back in any given year, probably but like the greatest part of your returns are driven by like a couple of situations.
Yeah, yeah,
Mm.
yeah. I think if I removed all that extra stuff that finds its way in, my returns would probably improve. But that's a work in progress.
Mm.
Um, okay, so then you know you're running pretty concentrated, which is fine. So how do you kind of think about portfolio construction? And you know, like if you're, do you have do you seek out like different sector exposure, or are you just happy to own the best businesses no matter where they are, and you know you might end up with sector concentration? How do you kind of think about that?
Yeah, cool. So I think about risk in terms of not knowing what you're doing. I think we've all been in that position. Like you own something, you think you know something about it, but you really don't.
Yep.
And then, like the shit hits the fan and, what do I do? Do I buy more? Do I sell? That kind of thing. So I think the more that you can avoid situations like that, the better you're going to do no matter what your approach is. So, yeah, look, like you said, a lot of concentration in the portfolio, and that is because, of my own limitations as a person. When you buy any publicly traded security or futures contract or crypto, whatever your thing is, that's an act of arrogance. You're saying you know more about this than the guy who's selling it to you.
Yeah.
And some of those people have been like, that's their livelihood. Like they've spent a lifetime doing this. So, it's, like the essence of being a human being is taking on risk and, and doing that kind of thing. But you also need to sort of have some respect for, what it is you're getting involved in with here. So that, like the opportunities to make, really great investments are rare. And the likelihood that I find one of these in industries or businesses that I feel like I understand, it's that's going to be a rare happenstance. And so when I think I've got an edge, done the work, the stars align. I want to get a lot. I want to, load up, as they say. And like the areas, and I'm sure everyone's done this, but yeah, everyone gets involved in something that they, that a peripheral understanding of, and they don't. So like I've had my ass handed to me in many, many, many different situations. And it's always come because I didn't really know what I was getting myself into. And so like I feel comfortable in parts of internet and e-commerce, parts of financials, and a few other rinky-dink little things like, distributors. And sometimes you can find a little business here and there that really is really not followed very well. And like you can actually get a bit of an information edge if you can sort of dig through and contact the people running the business and all that sort of things. Yeah.
Yeah. So you sort of, focused on a couple of sectors and rather than sort of taking a market saying, I need to find a company in XYZ sector because I've got exposure and elsewhere and that sort of thing. So then if you're kind of ignoring the market and just, looking for good businesses regardless of what sector they're in or, geographics and that sort of thing, do you consider macro at all, or is that part of your kind of process in any way?
Yeah, like the macro stuff is just like endlessly interesting. I think like, it's like the male version of star signs or, like tarot readings or something like that. Like
Yeah.
I think most guys could just sit down and just talk endlessly about, all the kind of stuff. And, like there are some overarching macro factors that are, really essential to, every approach, which would be things like interest rates. So I think it's very important to be aware of these things, but you can't like there's trying to make predictions on them are just like really hard. Like even economists and stuff like that, they just, like the Coop, you got him on Twitter. It's like a bit of a laughing stock. You know what I mean? Like it's,
Yeah.
you're trying to predict things which are unpredictable. And, I've heard a really great quote, which was, quite often you can figure out what's going to happen. It's just the when, and, depending on the asymmetry of your bet, you might not be able to like, hold on to that long enough to collect, or, the drawdown can be really tough. So it's like, for me, it's very important to be aware of some of these key variables like the cost of money, but they don't necessarily inform my investment process. And I would say things like countries and geographies that don't have the rule of law, don't have an Anglo-Saxon, a rule of law, property rights type, immediate no-go. There are cultures that are just like completely foreign to me. Like, the hell do I know about Poland? And the answer to that question is nothing. So even though you might be able, you might think that you find interesting things there, there's absolutely no way I'm going to have an edge in Poland. So some of those are like an immediate write-off as well. But like for the most part, like microeconomics can sometimes just incredibly trump things that happen in the macro economy. We might talk about this a bit later, but like I'm like known as like the FICO guy on Twitter. And that's a company that like has seen huge volume declines in its primary business and offset all that with pricing. Like you could have seen the mortgage implosion happen. You could have seen the auto sector implode in 2022. You could have been prescient on all these kind of things, but that wasn't what was important. What was important is that these guys were just going to like quadruple the price of the scores, and the rest is history. So sometimes you find stuff that is so good that it doesn't matter. It doesn't matter what macro is.
Yeah, and the macro thing, the when's the big thing, as you said. Like, everyone kind of expects the US or the globe to go into recession, but that was supposed to happen last year, and then it was this year, and now it's next year, and then it's the end of next year, and I haven't got a clue when it's going to happen. I mean, I'm sure there'll be one at some point.
And like
But
plenty of stuff happens that no one could predict. Like
yeah,
I don't remember anyone saying there would be negative oil
yeah,
in the
yeah,
front month
exactly.
contract. you know?
Yeah, absolutely. And all of a sudden something like COVID comes along, and you could have done a lot of work on macro, and you just throw it all out the window, and everything's changed. So
100%.
yeah, okay. So then maybe this isn't entirely relevant because you're not really a markets guy, but if you're kind of looking at your, kind of investment landscape at the moment and things that you're interested in and that sort of thing, valuation, that sort of thing, uh, what's your sort of view on the market presently? And is there anything kind of interest that's floating around that you're currently excited about?
I haven't bought too many things this year. I think, the market in general, um, like I think like everything at the moment hinges on the duration of the level of rates. So I think like, I hate to speculate on this, but it's like catnip. Um, so like if rates are like 5% for like another 6 months and they go down, I think that's kind of like the expectation at the moment. Like people are not expecting the current regime to persist for very long. And if that is true, there's pockets of things that look, quite attractive. Maybe the market's like not that poorly priced either. Um, if that's not true, I think there's a lot of readjustment that will be necessary in many publicly traded securities. And if that were true, if the duration of if interest rates go higher or they're higher for longer or whatever, that doesn't strike me as a particularly favorable market environment to be long a lot of risk. But that's just my opinion. I don't know if any of that's true or not. Um, but as far as the companies that I follow, I'm trying to follow these like really, really fabulous businesses that are like really inflecting. Like these are things that are going to dramatically increase their earnings power over a very long period of time. And the human mind is not well constructed to deal with non-linear outcomes.
Yep.
And so these things get like mispriced in almost every market. You'll find things that really do get mispriced in the top of 2021. Things get priced at the bottom of 2022. There'll be, there are things that are mispriced right now. I'm just not that aware of them.
Yep.
And so the market will, serve you up some of these opportunities from time to time. I think, probably the biggest thing I've bought this far was I topped up on some Amazon before earnings, and that was purely because I thought like it was selling off a bit, and fundamentally it was just going to do really like it's doing really well.
Yeah. Okay.
And so that was really it. But like I've got a lot of cash on the sidelines. And like any good saver, at the end of every month I've got a bit more money, and I have not much idea what to do with it, so I just take my 5%.
Yeah. Fair enough. Yeah. I mean, I have no idea, but markets seem, well, equity markets anyway, seem um, pretty optimistic at the moment, and obviously things have been doing well recently, and um, I guess it makes sense to be a bit cautious. And then there is this kind of macro debate at the moment around rates, and is it higher for longer, or are we getting cuts late next year? And I don't know that anyone kind of knows. I might have an opinion. It might be right, it might be wrong. But whether it's right or wrong is probably driven more by luck than anything else. So it's hard to sort of get excited about valuations at this point, put it that way.
I agree. I
Yeah.
agree.
So let's hope next year isn't a disaster, but we shall see. So
I wouldn't
then,
mind a disaster. A disaster might be okay.
yeah, I guess you've got a lot of cash, so that's a good thing. Right. So speaking of good things, so we've kind of gone through the background and the kind of where are you at now and all that sort of stuff. But let's kind of talk more about some war stories and I guess experience and that sort of thing. So maybe maybe starters, if you sort of look at all of the investments that you've made over time, like what would you consider to be your best investment?
So I've had like two, which are like are just very close in return over the time
Yeah, sure, two's
over
fine.
the respective. Yeah, cool. Like the first was this company here in Australia called Dicker Data. Like a bunch of the quality Australian small cap guys would be familiar
Yeah,
with it, but it's an IT distributor, so they, HP, Microsoft, VMware, all those kind of guys will resell their product through a local distributor. And they're kind of run by this like iconoclastic, like classically, larrikin, or not larrikin, but very irreverent Australian entrepreneur called David Dicker. And he did a great interview with on Rask last week. And it's like he's like a really idiosyncratic guy. It's a wonderful entrepreneurial achievement. But I bought some in like 2018, 19, and I bought a bit more when COVID hit. And it's just a really well run business in what would actually be a very tough business usually. So these distributor businesses are, they run on pretty small margins. They're quite capital light when they're run correctly. But it's a tough business. It's one of those ones where you really need to turn up every day, and like every day is going to be a battle.
yeah, right.
But these guys are like very intense operators. So like in the early days of the business, David Dicker and his former wife Fiona Brown, and both of them own about 30% of the company. So also it's completely insider controlled, but all they would do is just work.
Yeah,
and then
okay.
they'd go back to David's parents' house and watch football on the weekends. And it's a multi-decade type thing. If you read any of the reviews of working in their warehouse, it sounds like worse than being an Amazon employee. Like it's very tough, long hours. They've got all this technology in their facilities that like track people's it tracks their productivity. They're very hard on people, and they have to be. And they achieve profit margins which are like twice the industry norm, and they do that through this like very intense culture. And part of the success story is that they've done a couple of like pretty transformative acquisitions over the years. So they had like the flagship one in I think 2014, which was Express Data, which was a distributor which was I think much larger than them at the time in terms of business. And they came in, took it over, and like 5x the productivity of an employee.
Right.
So you kind of see like the gusto that they bring, and they've got these like. There's a few characters in the business. There's a gentleman with a Russian or an Eastern European name that escapes me now, but he's the COO, and he runs the day-to-day operations, and like this. So he's basically just being remunerated on like a percentage of the profits. That's like his whole pay, and this guy makes a fortune. But they pay their people really well. They expect a lot out of them. They kick the crap out of their competitors. And they keep rolling up some of these smaller businesses, and they bought another business in New Zealand. They just roll out the same playbook. Very aggressive sales force, just very impressive. I've been to the warehouse. I didn't meet the CEO or anything. I just turned up for the AGM, and really, really impressive. And they run a capital light operation. They fling out all the capital. They pay all the net profit after taxes, dividends. And it's just like very admirable, and it's not going anywhere. Like these people are necessary.
Do you still own it?
Absolutely.
Yeah. Okay.
Yeah, absolutely. So that's been like quite a good and a really good learning opportunity in terms of like I mentioned, one of the businesses I'd be interested in would be those that can employ capital at high returns, and that is like an example of someone who's been able to do that. But there's a very good reason as to why they've been able to do that. It's very explainable.
Yep.
They're just savage operators. And surprisingly, I've spoken to people who purchase from them, and they're much more expensive than their competitors.
Yeah, okay.
which is also like, that doesn't make sense. Like, how are you?
No.
Yeah, but
So what do they
it
make
kind
it
of,
up for in service or something? Or
yeah, absolutely.
yeah,
So they service, like who they sell to is like the retail fronts, like the people who are, going to on sell it again to,
okay.
and like they're basically like a IT consulting. So you come to them, you have like a really oddball thing that you need to do, and they're going to piece the solution together and get it to you really quickly.
Yeah, okay.
So very impressive. And like, an example of the other type of business I was talking about, which is one that just like doesn't need any capital, just prints cash and raises price all the time. That would be like FICO, Fair Isaac, um, which we talked about before. I bought that at the end of 2021. So, broadly speaking, they do two things. They have the credit scores. So they run a score on top of credit bureau data in the United States primarily. So if you go and want to, borrow money to buy a house or a car, you'll be rated with a score, and that kind of informs your credit worthiness as a borrower.
Yep.
And so like the scores cost nothing, right? It's just an algorithm that gets run on top of credit bureau data. It requires no sales, nothing, like doesn't, but it's necessary to securitize that debt afterwards.
Yep.
So it's like a tax on, lending money in the greatest economy on the planet. And so they were facing like, there was a lot of skepticism over their new software offering, which was being rolled up, and they were spinning some legacy software products out, and there was a lot of noise around that. And then there was a bit of noise around their regulatory position with Fannie and Freddie mortgages. So they're mandated for conforming the 30-year mortgage regime in the United States. And so there's a bit of talk about that. Like, there's no way they're going to get rid of it, but market gets anxious about these things.
Yeah, sure.
And so like literally at the top of the market, this thing was down. At the top of the general market, this thing was down like 30, 40, 50%. And if you bought it then until now, it's like a triple at a time
Right.
when the general market is like down, like from that point. So that's like an example of one of these things where you can buy things at like generational tops in the market or short-term tops in the market. And if the fundamentals are, really strong, you can do very, very well.
Yeah. Chart looks good.
Too
And
good.
you still own that one too? I think I know the answer, but you still own that one?
Yeah, I don't know if I'll ever sell it. I
Okay.
hate talking about these things because like, the market is just gonna like blow it up or something. As always happens. But look, it's a great management team, a really good, fabulous management team, and like everything that could have gone right went right. So
Yeah, cool.
valuations obviously like 60 times trailing 12-month earnings, which is that's a rich price in any man's book. But it's like firing on all cylinders. So my thing is just kind of like close my eyes and let Jesus take the wheel.
Yeah, and you got to find something else to replace it that's better, which, isn't always easy to do.
You won't find a better business. Like, well, I say it at the moment because anything could
Yeah.
happen, but like this thing, like unlimited pricing power, and they lever up to buy back the shares, and like the expenses go nowhere. It's got
Yeah,
no
right.
capital expenditure. It's like if you owned this thing, you would just you would never work, and you just whatever. You'd have hundreds of millions of bucks every year to spend, and life would be good.
Sounds great. All right, so those are good ones. Tell me about your worst. We've all got a war story. What's the worst?
Oh, this is where the learnings actually happen, because you learn nothing when everything goes to plan. Um, I think probably the worst one, and to give a little bit of context around this, I probably started on just like long only equity kind of thing, probably halfway through 2019. I sort of moved away from like option spreads kind of stuff, and good timing. Better to be lucky than smart. And so, like many other people, I was sort of, like the onset of the pandemic and like the massive artificial demand. Like I had never seen anything like that before. It's a very unique market to kind of like come into, to be
Yeah.
learning through. So like me, like many other people, owned Redbubble, and like
Oh
the
yeah.
story of, and maybe owned it too, but
No, I didn't. But yeah, I
lucky,
know. I know.
very very lucky. You still might be able to short it, and it might be all right. But look, the story of Redbubble is like pretty. It's a pretty inspirational Australian business story. They're an online marketplace that does like print on demand. So all like if you're an artist and you're on Redbubble, you can upload your designs, and those designs can be printed onto like notepads. They can be put onto coffee mugs. They can be put like they've got a range of items.
Okay.
And so like they started off as a bit of like a social network for these artsy types who also were interested in commercializing their work.
Yeah. Okay.
And so it started pre sort of 2000, I think it's 2006, kind of around that. And like the team of guys who ran it were former consultants and kind of like investment banker types who were also like Melbourne hippie type people. Like the founding CEO, and I forget it, forget his name, but he's like a proper Melbourne hippie. Like he's
Yeah.
still
Okay.
on Twitter, and all he posts about is like meditation, presence, and like all this like way out type stuff. But like really great entrepreneurial story. These three guys started it. They bootstrapped it to a social network and then to a print on demand company, and they went from just Australia to all over the planet. And it's it's a neat little business, but it's challenged in a number of ways. So they're like one of these people who like they do that thing in their annual reports where they've got the flywheel, like they call it a
Oh yeah.
flywheel,
Yeah.
which is like dead giveaway that we're talking about a shitco. Like that's an immediate red flag. But so these guys, they purport that they have this, the a kind of scale, like more scale makes the business stronger. So the more designs they have, the more artists are in, the more
And network effects kind of thing.
exactly the network effects, the more cheaply they can acquire customers for. So that's like kind of like the bull case. And they do all these neat things where the artist can like toggle up his royalty on the product that gets built, and they can donate money to charity. And like during COVID, they made a fortune selling masks in COVID, because you could buy all these custom masks with print on it and all that kind of stuff. And they like donated a bunch of that money to charity. Like, anyways, I digress. But they're very challenged, like morally and in a business way. So essentially what happens is there's a lot of trademark infringement happens on the site. So there's people who are selling like Rick and Morty's like the biggest thing on the site, like Rick and Morty t-shirt, Rick and Morty mask, Rick and Morty everything. And the people who upload that are not the Rick and Morty people. They're just some guy sitting in their basement in wherever. And like this culminated with the Hells Angels, funnily enough. So people were printing the Hells Angels insignia on t-shirts and selling it. And Hells Angel had a multi-year legal case against Redbubble, which was like quite scary. Like, the lawyer from the Hells Angels shows up. But this happens like en masse, right? So there's just massive trademark infringement happening on the site. Claude Walker, who's on Twitter, he talked a lot about this very early, very, very, very sharp guy. But they also suffer from like diseconomies of scale. So the profit margins on particular products vary widely. So masks are like the best thing you can sell. Tiny bit of product, it was really necessary. You could sell these masks for like $30 during the pandemic, and they cost 50 cents to make or something like that. So that added a huge profit boost during the pandemic, which was not sustainable at all. And then as you roll out to more and more of these products, the economics like really degrades. So like notebooks, t-shirts, massively commoditized market t-shirts. And so, having to roll out the logistics effort and all that kind of thing. And they had no captivity of the designers. So if you're a designer, you might put your stuff, like let's say you're an actual legitimate designer, not one of these people who's stealing someone else's IP. Mm-hmm. You're going to list on Redbubble, but you're also going to list on Etsy, Amazon, your own
Yep.
website, Shopify, the whole lot. So they really didn't have any kind of competitive advantage where they were going to be able to squeeze anyone, which is kind of what like you can see Amazon doing that with their merchants. They're really
Yep.
like got them by the short and curlies, and that drives a lot of profit. Um, and so they've had a slew of management debacles over the year. Like the long-term COO took over from the original CEO in like 2018, and he was like ousted by the board before COVID. And then the original CEO came back, and then they brought in this guy from Seek, who's like a bit of a, like there was a lot of hubbub around him, and I was actually very impressed with him. And I
Okay.
chatted with a bit on LinkedIn, and he's a very impressive guy. His problem was that he just took over a shit business.
Yeah. Okay.
Didn't matter how good of an entrepreneur he was or how good of a manager he was. And so, yeah, the thing's down like 90%. So, like an absolute fool, I, bought it on the first dip after the COVID run. So it ran up like 16 times during COVID, and then it sold off 20%. And like the genius I am, I thought that was a wonderful value opportunity. And, lost like 60, 70%, something like that.
Yeah.
So yeah, that was a very good learning opportunity for me.
Yeah. I was going to ask. So, what did you learn from that experience?
The like the Redbubble experience, and like there's a bunch more, by the way. I don't want people to think
Yeah.
like
Yeah, yeah, of
this is the
course.
only
Yeah.
failure I've had. Um, but the Redbubble experience was like doing uh the postmortem on that, you know, going over the competitive positioning, like the once in a lifetime stimulus boom, the legal quandaries they had found themselves in, like a bit of the shit show that like it's a mega woke corporate. Like this is unusual in Australia, but like
Mm.
it's as liberal lefty as you can get. And
Yeah.
like
Okay.
there's nothing per se wrong with that, right? But like when you're getting to a point where the shareholders' profits are being donated to non like charities during a once in a lifetime business opportunity, it's like, well, that
Yeah.
that's no
Not
bueno.
ideal. Yeah.
Not at all. And so, like, look, many learnings from that: learnings on valuation, learnings on expectations when you're underwriting something. Being flexible, as flexible as you can. Having strong convictions, loosely held. I think if I had been more committed to the analytical process, that would have been I could have saved myself some money. Which is always a good thing. The companies that do really well, sometimes you learn. You really learn about a business once you own it. So you can do a lot of the work on the front end, but nothing really engages the mind like skin in the game. And so I found with some of the businesses that I've held for like 5 or 6 years, or 2 or 3 years, and I learned, like, you keep learning about the business as you own it. And you can learn tremendous amounts that you didn't see originally, and you can kind of readjust and that kind of thing. But like the really great companies just keep winning, and quite often they surprise to the upside. Like a great company, the surprises aren't, holy shit, I woke up and this thing's down 40% today. Like the surprises are, they go up, they they
Yeah.
beat the expectations. Like FICO was a wonderful example of something that was able to like dramatically, irrelevant of the macro position, able to really generate extraordinary internal business returns. And that was like a learning process in pricing power and capital efficiency and all that kind of thing. So, but you definitely learn more from the mistakes. So.
Yeah. Yeah. 100%. You've sort of, it's like your tuition or whatever it is that they say. You sort of got to go through that process yourself to really learn it properly. Yeah, cool. So that's good. So before we kind of finish up, I was just kind of thinking, I guess from the sort of totality of your experience and your investing and stuff, do you had any advice for anyone that was just sort of getting started in the markets and investing in terms of like where to start, what to look for, how to kind of approach things?
Absolutely. So maybe you can learn from some of my mistakes instead of having to make them yourself. Although I can say personally, I like I have you can read about other people's mistakes and stuff like that, but there's nothing quite like touching the stove and it's hot and you take your hand off. That's been very informative for me. But I would say, when you're a young guy or girl, whatever it is, and you're starting off, it's a bit like you're starting anything. You want to kind of get a lot of exposure to perhaps, a lot of different approaches. Mastering anything is like learning to master yourself. So it would be like it'd be no good for me to be like a day trader like that. My personality just, that would not be a way that I would want to live my life. So you can try some, short-term stuff and some long-term stuff and maybe derivatives and whatever, on Twitter, there's guys that are successful with all kinds of approaches. I certainly don't want to say like, my way is the only way or the right way or anything like that. That's very far from the truth. But like for many people, index investing might be like the beginning and the ending. So, and that's a perfectly legitimate way to go about investing some assets. And some other people, they'll be like, trading ticks. So you try and find something that resonates with you and matches up with your personality, and that's going to give you like the highest chance for success, I think. Secondly, more broadly, I think, when a lot of people get started, they, maybe they're drawn to markets or investing or that kind of thing because of the money they think they can make out of it, which is like, certainly that is a very big reason why anyone's here. They want to make returns.
Yeah, sure.
But, profitability, that's like the output of, high quality work, high performance. And so the sooner you can sort of understand that good outcomes are at the end of a process, the sooner, you'll stop looking for shortcuts and you'll stop jumping out of this process and that process and, going on the hedonic treadmill. And you can, focus on honing a craft, which is, kind of like what this is. And like in many ways, the game we're all playing, it's like, this is like the hardest, most competitive game on the planet. Like there's guys out there with literally billions and billions of dollars pursuing perhaps the exact same approach you are. So, it requires a lot of work and focus and dedication and all that kind of stuff to be excellent. And, if you're okay with that, you'll do very well.
Yeah, 100%. I think, you've just got to go on your own journey and you either kind of figure out whether this is for you or not,
Exactly.
and where your place is or not, and that's okay. It be your thing, and you go do something else. But it seems like those people that are successful, success is just the output. They actually really love what they do and enjoy the work. And as you say, the kind of what creates the difference, I guess.
Yeah, like I've watched some great documentaries over the years, like the one on Michael Jordan, the Last Dance, and there's like this awesome documentary about this like sushi chef in Japan called Jiro Dreams of Sushi, and the guy's made sushi for 90 years or something like that, and all he does is make sushi.
Yeah.
And like he got an award from the emperor, and he was back making sushi that afternoon. And like Buffett's a lot like this, working in his young days, is 90 hours a week, like, and you read the Snowball and you watch, the Becoming Warren Buffett, whatever. Didn't see his kids, this guy was, and that's all of these people, like all the high performance people, they're just focused, laser focused on something. And like to have that kind of focus, you need to love it. Like it probably sounds bad, but you're probably going to be addicted to it. Like there's something, not, very interesting happening in your brain to produce that kind of outcome.
Yeah, very, very true. Very true. And it's, I think if you don't find it addictive, then it's probably a good spot for you. Well, look, that's been excellent. I've taken like sort of far too much of your time, but I really appreciate you agreeing to come on and have a chat. If anyone's got any questions and that sort of thing, how do people find you?
You can find me on Twitter. That'd be like the best spot. It's Buyback Capital or at Larry Jamieson. Look, I'm very responsive, so like DMs are open, drop in, it's all fine. I've got a Substack as well. I try to put something out every week, but sometimes life intervenes. And I put out free stuff and there's paid stuff as well if you're super interested in the
Yeah,
high
cool.
quality approach.
All right, I'll put both in the comments after the show as well, so that people can reach out. Thanks again. I really appreciate, particularly being my first guest. I think it all went relatively well, and hopefully you enjoyed the process as well. Um, Thanks to everyone for watching. I hope you also enjoyed the show and the content that myself and Larry put out. And as I said at the beginning, if you do enjoy the content, please like and subscribe. And I'll drop the details for Larry in the comments once this is posted, which will be in a couple of hours. But anyway, thanks again, mate. I really appreciate it.
Thanks for having me on.
No worries.